20 points off the low on the Nifty is what we have. 10,580, around 60 was the low. We're about 75 points in the red. It's not cracked in a way that you would expect the market to after, sliding in a pretty fast fashion a few hours earlier. But it's kind of sort of held the ground. There's been 20, 30 point pullbacks, 20, 30 point giveaways, but essentially right there. Market breadth, of course, is reflecting the cut that we're seeing out there on the indices. Asia has been down and out. 0.5%. Some markets have been better than others, but broadly lower. And of course, as we kick off at 1:30, there will be the European stock markets to watch as well. Maybe like yesterday, what will matter to Europe also is what US futures do. But that's Asia for you and how we were trading earlier on the Asian sort of session. But I think European session coming up as we speak, and I think slight positive there. Anish, afternoon.
Afternoon, Prashant. Well, yes, here we're talking about Dow futures, and it's still early hours, but for what it's worth, it's showing an uptick of around 100 points. Europe as well was expected to open in the green, and sharply so. So, in fact, FTSE sitting with a gain of 0.25%, and CAC also up about 0.5%. Remember, German DAX was under quite a bit of pressure yesterday, down about 1.5%, and today the expectation was that some of these markets might recoup some of the losses. Separately, investors will also be keeping a close eye on the political developments in Europe. Remember, UK Prime Minister Theresa May is expected to make an appearance in Brussels today as she discusses the current state of Brexit negotiations with the EU counterparts. But we'll discuss more of that and more. Let's talk about the Indian markets and what's making headlines at this hour. The global risk-off continues for the second day, tracks the Sensex and the Nifty lower by more than 0.5%. Midcap index flat, while the Bank Nifty holds out as crude prices fall.
Crude oil sensitives like oil marketing companies, aviation stocks and paint companies get a boost after Brent oil prices fall more than 25% from October highs. We saw a pretty dramatic sell-off overnight. Concerns over rising global supplies and growing fears of an economic slowdown linger on.
Jet Airways flying high. Sources tell CNBC TV 18 that Naresh Goyal and Etihad are in talks to etch a deal to save the beleaguered airline. Both parties wary of Jet Tata Sons deal being a distress sale.
Pharmaceutical stocks are leading today. They're higher. Dr. Reddy's gets a boost after it's won a litigation on an anti-drug addiction drug. Wockhardt too is seeing some relief after the US Court of Appeals rejects Johnson & Johnson's request to prevent generic companies from selling another drug. Wockhardt tells CNBC TV 18 that a final approval for that drug should come in pretty soon.
Well, and RBI sources tell CNBC TV 18 that a part of NBFC loans to builders are not backed by projects. Repco admits that there could be asset quality problems in the builder segment.
Okay, let's get in Ashwini as always at the start of the show. Ashwini, thanks very much. Afternoon. So will the market hold these levels according to you?
See, something that's I have noticed that the crude sensitives like Asian Paints and BPCL etc., they are selling off sharply from whatever highs they opened at. For example, BPCL was 8% higher, now it's 1.5% higher. And again, this 20-point pullback that you saw was basically a weak pullback. So my sense is that now crude sensitives may also join in. And whatever Europe is doing and, this 100-point futures, etc., I don't think may matter as much. And the market's failure to get past 10,600 basically means that there is more weakness, and that weakness is likely to start at any point in time. So basically, Bank Nifty is holding up the market, but again, out there it's about 100, 120 points. So the market is not giving you a whole lot of sense of strength. The only place where things are different is the Nifty Next 50 or the mid-cap broader market, where there's been a nice sharp rally, and basically it's the cost of capital issue. The smaller stocks tend to move much harder whenever capital cost comes off. So having said that, individual stocks. Ashok Leyland is a buy with a stop of 108, target of 114. Oro Pharma is a buy with a stop of 795, target of 820. And HUL is a sell with a stop of 1700, target of 1660.
I mean, actually, that observation is absolutely bang on. Look at the oil marketing companies, paint companies. You know, I was talking with Ashwini about Indigo not reacting to the dramatic fall in oil prices earlier at 11:30, and the same thing is happening to the other sectors as well. Across the board, I mean, sharp givebacks in what is supposed to do well when oil prices are down, not really panning out anymore in that fashion. 73, 74 points lower is where we are. Ashwini, thanks very much. Appreciate you joining in with some of that perspective and trades. Nick Parsons, head of research and strategy at Thomas Lloyd, is joining us on the phone line. Nick, thanks very much. Appreciate you joining in here. Good morning to you there.
Good morning from London.
Is this a growth scare, Nick, or is this, extremely stretched markets in the US giving back some of those gains?
Well, I think that the important thing to note here is that it's not just US equities which are falling. Right across the spectrum, every single asset is seeing the weakest performance in at least 5 years. And in fact, the best performer across all asset markets in the United States is cash. Now, gold is flat on the year. Corporate credit is down on the year. Treasuries are flat on the year. US equities have now given up all the year-to-date gains. The problem here is that nothing is working. There is no single asset class which is showing positive returns above those which you can get in cash. Now, that is what's really weighing down on investor sentiment, because it seems that nothing they do, nothing that they can do, is going to produce a positive return. And that is weighing on sentiment here, in particular in this week where we've got a US Thanksgiving holiday and we're only 6 weeks from year end. So it's a very negative sentiment right across all asset classes.
What is driving that sort of lack of any return across the board? I mean, what's the reason behind that? Yes.
I think there are several reasons for it. The big one, of course, is the Fed and its policy on interest rates. The second is more global, and that's the process of quantitative tightening. The third, I think, is really the build-up of excesses that were brought about by quantitative easing over the last decade. So we've seen a lot of leverage in the market. We've seen a lot of investors who've only ever been able to buy the dip, because that's been the investment mantra for the last decade. And as that is beginning to be turned on its head, then buy the dip, I think, will rapidly become sell the rally. And I think that's going to continue to weigh down on investor sentiment until year end.
Nick, so you're saying that there's this negative sentiment across all asset classes. So in that scenario, what are you advising your investors, especially with respect to EMs in India in specific?
Well, I think that the positive news here has been the surprisingly good performance of emerging markets during this phase of sell-off that's been persisting for the last 10 days or so. We've got the Nifty at 10,500, give or take a few points. And if we'd been talking 2 weeks ago about 1,500 or 2,000 points off the Dow, and what would that impact be on emerging markets, it's very unlikely that we'd have thought they'd escape unchanged. So I think we can take some comfort from the performance of emerging market equities. What has been especially encouraging has been the performance of the currencies. The Indian rupee, the Philippine peso, the Indonesian rupiah, they've all put in a solid performance during the month of November. And I think really it's going to be the currency market that will hold the clues here. If we can continue to see resilience in foreign exchange, in emerging market currencies, then that bodes well for emerging markets' relative performance. But if we see that recent strength of India, the Philippines, Indonesia and elsewhere beginning to unwind or come to an end, then that for me is what would send alarm bells ringing across emerging markets equities.
Nick, so, I mean, just to conclude, it doesn't seem like a growth scare at this point, Nick, does it? I mean, it's almost as if everybody realizes that what's happening in the US is maybe a pullback, a huge rally uninterrupted for years, and it's just that. So, and you know, maybe we had one high-frequency growth number, the home builders index, etc., which came in short, but every other indicator in the US is still strong, pointing to strong growth. So, is there a realization that this is just a stock market thing for now?
Well, it may just be a stock market thing, but we'll be watching very, very closely to see what happens during the holiday retail sales period. You're absolutely right that for the moment it's limited in certain pockets of weakness, most notably housing. But if housing extends to consumers and then consumer spending extends further into tech, and that extends all the way down the supply chain, we've got a real problem on our hands. We're not at that point just yet, but I think the holiday selling period, which will kick off on Friday, the day after Thanksgiving, is going to be even more important as a barometer than it has been in years gone by.
Okay, Nick, thank you so much for joining us. So a bit of negative sentiment around our asset classes, but the key perhaps might be in terms of the currency, how they move, and the emerging markets and India doing a tad bit better than the developed markets.